Welcome to This Week in Money. I'm Jim Goddard. Today, CIBC Wood Gundy's Ross Clark on the dismal prospects for the Canadian dollar, and perhaps the most important show ever on real estate. Real estate consultant Ross Kay on the myths, monsters, and math surrounding skyrocketing property values in BC and Toronto. We'll talk to Ross Clark right after this.
I'm Larry Ray, President and CEO of American Manganese, Inc., listed on the TSX Venture, ticker symbol AMY, A-M-Y, with proprietary patents in the U.S., China, and South Africa. Our focus is on recycling lithium-ion batteries for electric vehicles. China recently legislated the responsibility for recycling onto their electric vehicle manufacturers and importers. For more information, please visit AmericanManganeseInc.com or phone me, Larry Ray, at 778-574-4444.
Welcome to This Week in Money, the source for market opinions. Here is Jim Goddard.
My guest is Ross Clark, investment advisor at CIBC Wood Gundy in Vancouver. Welcome back to This Week in Money, Ross.
It's always a pleasure to be with you, Jim.
The U.S. Fed has released its minutes. Does it look like they're going to be hiking interest rates in the U.S.?
Well, what what we had expected to see was a hike somewhere out in the fall, maybe as late as December, but the minutes that came out this week open up the window and would suggest that there's a very strong hint of a rate hike in June. It will all be, quote, data dependent, as it always is with the Fed, but the way things are moving along right now, probability of a June hike has become forefront in people's thinking. And that announcement caused a very good upside reversal. I shouldn't say upside reversal. It was a continuation in the U.S. dollar strength that we've been seeing here for the last 10 days or so. The U.S. dollar now at its best levels in over a month and a half. Against the index, and against the Canadian dollar, we're down over 4 cents now on the Canadian dollar since the top of the run, and it was an exceptionally good move on the upside for Canada, but it's giving it back very, very quickly. And our work that we've presented this year showed that once this bear market rally had found its peak, that we should be expecting a minimum 50% correction, maybe as much as a 60%. So that would put the support area for the Canadian starting at 74, maybe going down to 72 3/4. And from there, probably going into a bit of a consolidation phase through the summer, because the breaks that we're talking about, this 50%er, they generally take 2 to 2.5 months. And that would put us right into the context for a bit of a thrashing around in the summer. The other thing that showed up recently on the Canadian versus the commodities was the fact that oil this week managed to push through the $47 level and move up just shy of 50, and that was without any movement of strength in any of the commodity currencies, the Canadian being one, the Australian dollar being another. And any time that you see that failure of those currencies to move with the commodities, you can expect a good 6 to 8 week move on the downside. So it fits in with our other criteria that we're looking for there.
What's happening with gold?
Gold, if you believe it, it's 3 weeks in a row on the downside now. It doesn't seem like it's been that long, but the bullion itself closed off the week at $12.52. We mentioned last week that prices had been in an expanding triangle pattern, a megaphone appearance as we would look at it, and that in the past, if you've got one of these megaphones, you can come back and test the breakouts, maybe overlap it by about 1%, and the breakout had been 1273, so that meant that 1260 should have been a support area. And the 20-day average, which was at 1260 a week ago, had also been a good support. We got a bounce, but then when the Fed minutes came out, we saw the gold market break down into the 1245 range, closed off the week at 1252. It looks as though it's heavy enough here that with all of the speculative positions that are on board, and we've talked about this in the past, the commitment of traders numbers continue to be up at record levels. Probability is that we should see a correction down to test at least the 1210 to 1215 support area. Wouldn't be at all surprised if it's more into the 1160s. And if that's the case, the miners, which had clearly been the big winners, not only against the bullion, but just about anything else in the equity markets this year, that can be setting up for a good 40 to 50% correction as we move into the summer.
Wow. So the old saying, sell in May and go away, better sell in May and run away?
Well, as far as I would say for the high flyers, yes. The equity market as a whole, here we are at the end of the third week of May, and in election years we would be looking for more of a low from here through the first few weeks of June that gives us a summer rally. So, it's not the old adage, sell in May, go away. It's more sell in May, find a buying opportunity, and then sell again in July, because by the time you get out to October, that's where you tend to find your best seasonal lows for the year.
Ross, if anybody has a question for you, how can they get a hold of you?
They can always get me at ross.clark@cibc.ca or by direct line in Vancouver, 604-661-7759.
Ross, thanks a lot for chatting with us.
Nice to be with you, Jim.
Coming up, Ross Kay, next on This Week in Money.
Always consult your investment professional before making any investment decision. This Week in Money is archived online at talkdigitalnetwork.com.
Welcome back to This Week in Money. My guest is Ross Kay from Ross Kay Realty Consultants. Welcome to the show, Ross.
Thanks for having me back.
Could you maybe explain a little bit about what Ross Kay Realty Consultants does?
What does Ross Kay Realty Consultants do? Well, I can surmise it in one sentence. We allow our clients to time the market. And what that means is that we are the only firm in Canada who allows our clients to make decisions on a real estate market by timing it. So we know exactly how much the housing prices are going to go up next month, in the next 2 and 3 months. We know when a housing market is going to correct. We know how to read every single variable that's happening in the marketplace. And there are investors who are able to take advantage of that information, and they can make some big gains for their own firms. So if you were a hedge fund manager out of the States and you're looking to make a play in the Canadian real estate market, you may be someone who would have already contacted our office and secured our market intelligence. We are able to do things that no one else in Canada can, and arguably no one else in the world, because the variables that are in place in Canada in terms of measuring housing markets do not exist anywhere else in the world today. So that's what we do. We do offer some consumer level products now. We've launched the wealthyhomeowner.ca program. The Wealthy Homeowner program shows someone how they can effectively own their home and put an extra $400,000 to $500,000 in their pocket over the next 40 years while they own it. We update our strategies virtually every single month. As a new opportunity comes available, we see if we can bring it to our clients. If we can, we do. If we don't see any benefit in it, we don't. If you're buying a house, we allow you to buy a house in a no-risk situation. In other words, you have no risk in terms of losing money. You have no risk in terms of buying a house that maybe you shouldn't have bought in the first place, i.e., the neighbors aren't safe neighbors. The basement is not going to leak. The roof is not going to fall apart. If it's got anything to do with residential real estate, Ross Kay Realty Consultants is available to help. That includes the government of British Columbia and any help they would like to have about rectifying this foreign buyer situation in your province.
And Ross, we'd like to make it perfectly clear that our story today is not about race or culture. We're talking about a country, China, that people want to get money out of, and a nation, Canada, that welcomes that money, and the market dislocation caused by it. At rossk.com, you've researched a piece called Vancouver's Currency Exchange Ponzi Scheme Against Canada's Housing Bubble. Can you give us a thumbnail of that article?
Yeah, what that article did is we had to step back because our predictions and forecasts are accurate regardless of what the explanation that we have to provide. The clients that we deal with, because they are often working in such substantial amounts of money in funds, and because they're often responsible to others, we have to provide them with explanations. So the mere fact that we've been perfectly accurate since 1990 till today, that doesn't matter to these guys. These guys also want us to be able to provide them an explanation. We could not provide an explanation for the price points that are happening in West Vancouver or Vancouver West or a few other real estate districts out in Vancouver. What happens with our market intelligence is that our forecasts, our predictions are always accurate. I mean, these are real estate markets work in one specific way. It will never change. But there's always some little irregularity. It could be in Winnipeg. It could be in Toronto. It could be somewhere else. These irregularities usually work themselves out in a month or two. So we know after the fact what the irregularity was. In other words, sales might be an extra 10% higher one month than our forecast was. But then the following month, they're 10% lower. So all we know is we know that those sales were just simply put forward, and we can provide our clients with an explanation. What was happening in West Vancouver, Howe Sound to Point Grey, we could not explain. In other words, our forecasts were still right. So in other words, the price gains that were going to be recorded were exactly accurate. But we couldn't explain it. So when you can't explain something, there's a reason in real estate why you can't explain it. With our model of real estate intelligence, you can explain everything. Howe Sound, we could not. So we had to step back and we had to look at variables we would normally turn our backs on. Variables that normally are simply real estate myths. One of those myths is the foreign buyer myth. Foreign buyer myth has been perpetuated by the real estate industry in Canada for over 30 years. In the last house price correction prior to that, the exact same news articles that you hear today appeared in the papers in the late 1980s before the correction took place. The foreign buyers were always held up as a myth. Now, the foreign buyer myth is a myth, except for in specific cases in late 2015, 2016. That is the ultra-luxury class of homes. Your ultra-luxury class of homes are the homes that occupy the top 1% of the valuations of all homes in a community. Your luxury class homes, they are the houses that occupy the top 10%. So the ultra-luxury class is the really expensive homes normally reserved for celebrities, people with simply excess amounts of money. There was no way when you sat back and you looked at the data that those homes could be sold. So what I mean by that, Jim, is equity flows in a real estate market. So all of BC flows in one way or another right into Point Grey, Howe Sound, the two most expensive markets in BC. It flows from Okanagan, it flows from Mission, it flows from Vancouver Island right into that one point. Now, when a house is bought, it is bought with cash and with mortgages. So those two components always add up to 100%. So one of the variables that my firm uses to make sure that our numbers are accurately calculated is we interpret mortgage data, and we interpret the amount of cash that's available in the market from the sale of other homes taking place. So what that means is in Vancouver or in BC, houses right now are trading every 6.6 years. 6.6 years, you can go back, take today's price, go back 6.6 years. You can figure out what the difference gain has been. You can multiply that by the number of sales. You then compare that against the mortgages that were registered. And these numbers always, always, always come out exactly the same. Because they have to come out exactly the same. Now, you need the knowledge to know what they have to be and why they have to come out exactly the same, and that's why people hire our firm. In Point Grey, in the last quarter of 2015, in that West Vancouver area, Point Grey and in Howe Sound area, there was $10.5 billion that we could not find. We couldn't find it from the existing inventory of homes that we're selling. In other words, equity being passed up. We could not find it in the new mortgages that were being arranged. There was a $10.5 billion loophole. You have to accept reality. The reality is the only way $10.5 billion could magically appear is if they came into this country from another country. That is the only way that it happens. So normally across Canada, you may see the need to fill in $15 billion for the sake of the argument and a quarter. You're not going to see $10.5 billion in one little area, which is exactly what we found in certain hot spots in Vancouver. So then you had to go back and you had to listen to what was being reported by the Globe and Mail, shadow flipping, the new rules being brought in by your provincial government because clearly they believe flipping is going on. You had to accept the fact that that website that was created specifically for to sell properties to people who live in China, Canadian homes, and that on that website there were homes that had already sold, which our market intelligence is able to substantiate. And then you hear the stories about houses trading hands 3, 4, 5, 6 times before it gets registered at your land registry office. If you simply assume a part of those comments were true, then you have to, and you look at the 10.5 billion shortfall, a clear picture came available to us. So what I mean by that is, we can create a real estate Ponzi scheme anywhere in Canada, and the banks will actually finance it for us. I've been able to do that for over 30 years. My dad could do it when he was in real estate before I even started. So our family knows how you could create a Ponzi scheme with real estate, and it would be technically legal. The last person entering the scheme enters the scheme on purpose in a real estate Ponzi scheme. But in this case, with the premise being foreign currency exchange, the last person entering is willing to take a loss. If you look at selling prices in those two areas between January 1st, 2014 and January 1st, 2016, home prices generally went up 36.6%. If you take what the house sold for on January 1st, 2014, at the current exchange rate between the Canadian dollar and the Chinese yuan, and then you replicated the same process, what it sold for on January 1st, 2016, what's the then current value of the Chinese yuan? You came out with a 35% increase. You're only out by 1.6%. That is not coincidence. Clearly, houses are flipping over and over again simply in order to allow currency to come out of China. There is no other reason available. There is no other real estate explanation possible. The numbers are so accurate that we shook our heads when we plugged them in. To find a 30% difference in selling price and a 36% difference, or a 36.6% difference in selling price and in Chinese dollars, and a exact same difference in the prices that were achieved, it's simply that's not a coincidence. That was planned. So we know without question some properties, 10.5 billion in the last quarter of 2015, were part of the currency exchange Ponzi scheme, where the house prices artificially inflated simply to allow the currency to be exchanged. You might remember, Jim, that not too long ago you heard about vacant houses in Vancouver being owned by some registered Chinese corporation.
Yes.
You remember those reports?
Yes.
Okay. So now we reach out to our American lawyers. Our clients have obviously American representation, and they gave us our permission to reach out to them. So they gave us a couple of names. We called them and we asked them their opinion on what's changed about people trying to get money out of China. They laid out the exact format that takes place, and they told us the changes that have taken place. So they said, like a year ago, or 2 years ago, you could have registered, a Chinese corporation could have taken money out of China by buying residential real estate. Then the Chinese government said, no, you can't do that anymore. Now you can only do it if if it's registered in a person's name. Well, guess what happened in Vancouver? All of a sudden, houses were getting registered in people's personal names. So I think it was only last week there was some report about a house being underlisted, and some Chinese gang was being referenced. Now, whether that was a Chinese gang or a gang from Canada with Canadians that have Chinese names, I don't know. But it made the news. That's what happens when you have a Ponzi scheme. Criminals get involved sooner or later. So whether they're using it to launder money, which I don't think is the case, I firmly believe it's simply to exchange currency in the most cost-effective manner possible, which right now, Vancouver happens to be one of the best places in the world to have that happen.
Ross, have financial regulations in China and Canada provided fuel to the ultra-luxury and luxury real estate markets in Vancouver? And how long has this been going on?
Well, I think when you see the numbers, Jim, in our perspective, this was a late 2012 issue. I mean, it's probably been going on for a while, but it wasn't really causing much damage to the regular Vancouver homeowner. Then late 2012, the first-time buyers found that they were priced out, so they quit buying houses in Vancouver, and they've been leaving the market ever since. That causes the average selling price naturally to inflate anyways. So obviously, if fewer lower-priced homes are selling, and more expensive homes are selling, your average price is going to naturally increase, which is one of the reasons your listeners should never, ever listen to a real estate agent, to a real estate board, the Canadian Real Estate Association, or CMHC, because they all use average selling price, as does all the banks in Canada and all the economists who work at those banks. Every report that you can go and find online uses the average selling price. They can get into a debate with me whether or not this benchmark Home or the Terranet National Bank HPI or the MLS HPI are really average selling price. But what I can tell you is from our own market intelligence, that is exactly what they are. And we can prove it. That being said, on the ground, Vancouver was so lax in what's going on, Jim. It is if you wanted to launder money or exchange currency through ultra luxury class homes, Vancouver is the place to go. When you look at it, you have a real estate community who is flipping their thumb or their finger at the Canadian government and refusing to complete FINTRAC forms. That has now been proven by the federal government itself, who it appears have dozens of real estate brokerages in Vancouver now facing fines. And if the federal government was smart, they should be going after jail time for at least one realtor. Because if you don't fill out a FINTRAC form as a realtor, the law is a minimum $10,000 fine up to a year in jail. The realtors in BC snubbed the rule. They ignored it. Apparently, only 7 forms were ever sent into the federal government. Well, there happens to be a requirement on every real estate agent in Canada that if you are doing a deal and you are suspicious of the person or where the money's coming from or the person that you're dealing with, that you are required to issue a suspicious transaction report. Every real estate agent in Canada has heard this for a decade. It was drilled into us by every real estate organization in Canada, and we were told repeatedly by lawyers again and again and again, you had to do this. I have over 500 forms filled out still from when I used to sell real estate because I have to keep them for a certain period of time before I can destroy them. That's another part of the law. On the government website for realtors, specifically for real estate, they tell you the instructions that you're supposed to follow, and they list all of the items that would indicate a suspicious transaction happened. One of those items is someone coming from a foreign country who you don't know. What are you going to do? Look at their passport and say, yeah, that's who it is? Of course not. You can't prove that. You don't have the training. You don't have the experience to know if that passport is real. Even if maybe you don't even have to see the passport. All you see is a $100,000 commission sitting there looking at you in the face. And if you ask to see that form or ask to see that identification, maybe you don't make that $100,000. Clearly, that's what's gone on in BC. They have refused to follow the federal guidelines. Clearly, if you wanted to write a currency exchange Ponzi scheme, that is a real estate market you would target because they're not going to check even who you are. Had they done that, the federal government right now could give everybody the answer that they need. But real estate agents in BC, for whatever reason, would not report suspicious transactions.
Well, for example, Peter Brown's mansion in Vancouver sold for over $31 million, and the listed buyer was a, quote, student, unquote.
Correct. So that is an automatic suspicious transaction form has to be completed. It's the law. If you want to earn tens of thousands of dollars earning commission by selling real estate, in other words, you want to have no training, no experience, no education in what's required to sell real estate, and you still want to earn tens of thousands of dollars, the federal government says, okay, fill out the FINTRAC form. Apparently in BC, they haven't done that. Assignments. In BC, it looks like what was going on is people were going door to door with flyers saying, hey, are you interested in selling your house? Don't use a real estate agent. I'll give you cash for it today. Well, there wasn't a warning issued by any government body in BC that is a probable money laundering scheme. There's something wrong if someone is coming to your house offering you cash. Assignments. If a real estate agent in BC listed a house for sale and they did not tell their seller of the potential risk of an assignment, they were breaching the law. When an assignment is done, there is a potential that the current owner of the house or the end buyer, after two or three flips take place, doesn't close. That means there's a series of lawsuits that take place. Certainly, at the minimum, the realtor should have warned Vancouver home sellers that those lawsuits were probable. They weren't doing that. Now you have a taxation problem. For whatever reason, your government in BC refuses to tax foreign buyers gains on their properties. Refuses to do it. They believe they let the real estate community guide their decisions. You've heard your premier in BC on national news saying she doesn't want to take action because she's afraid that would hurt, people would lose equity in their homes. Let me tell you what's going on. Because she's waiting, the damage is going to be far, far worse than had she taken action. A house price correction is a natural function of any real estate market. Without a house price correction, money would never be loaned on properties. The only way that you can buy a house for more money than what the guy paid for the house next door is because the bank will extend you more credit. We have referred to that for years as called leapfrog financing. In an accelerating real estate market, the banks even drop off their requirements to the appraisers. So when an appraisal is done on a property in order to secure financing, there is a definition of an appraisal by the U.S. PAP, and that definition states that an appraiser has to work through a whole set of variables, meaning if two identical houses would be valued at the exact same amount, irregardless of what the price offered on the property was. So in other words, I buy my house today for $500,000. The neighborhood has the exact same house next door. And I don't mean close, I mean identical. Same age roof, same age furnace, everything's exactly the same. That house would never appraise for more than $500,000. The banks apparently in BC have thrown that instruction to the appraisers out the window. I know they've thrown it out in Ontario. And they instead are saying, can you appraise the house at this if this is what the buyer is willing to pay for it? The appraisers are saying, oh yes, under those conditions we can approve this appraisal. Ah, perfect. Chinese buyer inflates the price 15%. Now you also have the opportunity to get some financing out of the property. Now that's another discussion. So the number of issues, Jim, just keep adding up and up and up. No one took action on it. They just simply have ignored the problem for years now. And sadly, it's the regular, average Joe who owns a house or wanted to own a house in Vancouver is going to be the one that pays. Now what you're going to see is everybody running for cover. Blame's going to be going all over the place. And it's already started, hasn't it?
Certainly
because right
has.
now the Real Estate Council of BC is investigating assignments. What they're trying to do is wipe their hands of it because they weren't doing their job. They should have been, they are the self-regulating body for real estate agents. They had an obligation to be sure that those agents were doing what was legally correct. They were caught with their pants down. They were not doing their job. Now guess what? Cover up. Who's going to cover up next? Your premier?
Is Okanagan real estate affected by the ultra-luxury and luxury markets in Vancouver?
Certainly is, Jim. So Okanagan is what my firm calls a peripheral market. In other words, equity flows from Okanagan through several or a dozen trades into Vancouver. What that means is that as those house prices inflate in Vancouver, gradually over time, the price price point flows out to the peripheral markets. They're the last ones to benefit from a house price bubble. They're also the first ones to get hit. So now the damage won't be as bad where you are, but it'll be one of the first places to get hit because equity will leave and it won't be replaced. That means lowered house prices. So yes, it does affect that market.
We hear people in China want to get their money out of China to safe haven countries. Have they been using Canadian corporations to buy real estate, or have they been purchasing it personally?
Both, yes. No big debate. Yes, 100%.
Is it possible to determine what properties held by Canadian corporations are actually owned by citizens of China?
Yes.
How do you do that?
They need to call me. Your government needs to call me. We're talking now proprietary knowledge, Jim. That is knowledge that people pay me for. If they don't know how to do it, that's their problem.
Do offshore investors take out mortgages in Canada? Could this put Canadian banks at risk? And if so, how much risk?
Yes. How much risk? Lots. Imagine the Ponzi scheme that's going on, this flipping of a single sale. Someone a foreign buyer purchases a home for $2 million. They have $1 million cash. I can walk into any bank in Canada today, any bank in British Columbia, with $1 million purchasing a $2 million house, and the bank will give me a mortgage. They won't ask me for my qualifications. They won't ask me for a credit check. If they do, it'll only be just to put something down for their risk officer at the bank, and they will issue me the loan. They now have a loan for $1 million on a $2 million property. Next guy comes along. He's part of the scheme. I will give you $3 million for that house. He goes to the bank. Another bank. He finances 50% down. He puts $1.5 million down, and he gets $1.5 million mortgage. The house is artificially inflated by $1 million already. So now what you did, you've gone from a 50% financed mortgage with the first buyer into a 75% financed mortgage with the second buyer. Now it happens a third time. This time he gives $4 million. He comes in with $2 million cash. He says, I've got $2 million on this $4 million home, and I need 50% mortgage. The bank's signing the papers as fast as you can blink. Now what you effectively have is a 100% financed property. In other words, the housing market corrects for the sake of the argument, and it corrects all of a sudden. The appraiser goes in and appraises that exact same house, but now he follows the U.S. PAP instructions on the definition of the appraisal. Because the banks have said, we're in trouble. Let's make sure any appraisals are done are real good appraisers. Don't give them any leeway at all. We want this in writing. Okay, now the home appraises at $2 million again. The same thing it was at the start of the Ponzi scheme. But there's $2 million of financing on it. The price is correct 10%. Now it's a $200,000 loss. The foreign buyer doesn't care because he was able to exchange currency, get currency out of the United States. He's probably gone elsewhere and taken that $2 million of currency back out again. So that's how a bank can get in risk. Now, what I think is happening on these ultra-luxury class, these are cash sales, Jim. Because on a cash sale, it works for getting currency out. There's no need to get financing. There's no need to get a bank involved. Simply pay cash for the house, get your yuan changed into Canadian dollars. Once it's in the Canadian dollars, sell it to somebody else. He moves his yuan over. He gets Canadian dollars, sell it to somebody else. He moves his yuan over, gets Canadian dollars, sell it to somebody else. So I think generally these ultra-luxury class sales are taking place on almost all cash. And when you look at the mortgage data, pretty much verified.
Has this Ponzi scheme caused prices of other real estate to be pulled higher?
Yes. The reason they've been allowed to be pulled higher is because real estate agents do not understand what the average selling price does and how it changes. The banks do not understand about the average selling price. The economists do not understand about how the average selling price evolves over time. To explain this properly, pretty much everybody would agree in Vancouver, detached homes have gone up at least 30% in the last 2 years. You're going to get universal agreement over that. If you talk to anybody on the street in Vancouver, they're going to say, oh yeah, house prices have gone up a little, 30. Oh yeah, they've gone up more than that. That means it's become a popular belief. It's believed that housing prices have gone up 30%. So even though that 30% may have started in Howe Sound and Point Grey, and it might have been part of a Ponzi scheme, it means that over time, everyone believes that this has happened. So the guy buying a house that was $1 million 2 years ago will pay $1.3 million because he believes the house has really gone up 30%. There's a trickle-down effect right on down the market. Where it's not really seen as much, Jim, is first-time buyers, because first-time buyers can only afford to buy a very, very limited priced house. So what they do is they just adjust what they're buying. But when you have equity, when your own house has gone up 30%, you have an extra 21% to pass forward to the next house. So that allows you to get about a 73% mortgages on a move are about 72 to 73% normally. So you're able to get an extra $3 for every dollar your house has gone up in value.
Have low interest rates played a part in attracting this offshore money and facilitating the rest of the market to be pulled higher?
Attracting offshore money, no. Allowing the rest of the market to go higher, 100%. If you can, the bank will approve you for a certain amount of financing. The bank does not approve you based on how much the house has gone up in value. The bank approves you how much mortgage you can carry. Now, if you have $1 million and you can only carry a $400,000 mortgage, it means you can buy a $1.4 million house. If you have $500,000, you make the exact same amount of money, so you still qualify for a $400,000 mortgage. That means you buy a $900,000 house. When interest rates go down, the amount of mortgage the bank will qualify you for goes up. If you look at the pre-approval certificates issued by every lender in Canada, it does not say you can buy a house. We pre-qualify you to buy a house between $200,000 and $400,000. What it says is, congratulations, Jane and Joe, you can buy a house worth $400,000. Go ahead and buy it. That's what the pre-approval certificate says. If the bank tells me it's okay, then I guess it's okay. If the government tells me it's okay, I guess it's okay. If CMHC tells me it's okay, I guess it's okay. So Canadians go out and spend $400,000. They don't spend $2.
Shadow flipping. An ultra-luxury property sells for $5 million, is flipped for $5.5 million, then $6 million, $6.5 million, and finally sold at $7 million. Does this series of flips provide a legal way to get $30 million out of China?
Sure does. $30 million Canadian, Jim. You're getting, right now, you're still getting about 4.5 yuan per dollar. So multiply 30 by 4.5, and all of a sudden, you're what? 140 million yuan have been taken out. It's a staggering amount, Jim. Staggering. And this is why this flipping issue, the paper, and they call it shadow flipping. You know, everybody wants to use a scary name. It's not. Historically, this is what's called a paper flip. As a matter of fact, regulators across the country, provincially, used to warn real estate agents about doing paper flips, because in some provinces it is illegal for a real estate agent to do a paper flip. The real estate acts in those provinces state that the realtor is licensed to trade real estate. They're not licensed to trade paper. And the courts have determined when you're doing a paper flip, you're basically selling a contract. You're not selling real estate. So that's how what a paper flip is. If they want to call it shadow flipping, so it sounds a little scarier, and maybe people will listen a little more, I encourage them to do so, because this is a serious issue for Vancouver.
Are the shadow flipping funds coming into Canada tracked by FinTrack?
They're supposed to be, but real estate agents in British Columbia have refused to meet their obligations, apparently. 7 forms being sent into FinTrack, FinTrack investigating brokerages, FinTrack itself in the newspapers saying, we found serious issues. FinTrack doesn't talk that way. They're quiet. They go ahead and do their business. They issue a few warnings. Hey, guys, you're a little lackadaisical. You need to pick this up. No. They came right out and said what's going on. They know real estate brokerages in BC have failed to do what they're legally supposed to do.
Ross, over the last 2 months, nearly 10,000 pieces of real estate have changed hand, and you're saying only 7 forms were handed in?
There's been 7 forms handed in, as my understanding, in the last 7 years. That's it. All of these sales to people who are not Canadian citizens, if the person you're selling a house to is not a Canadian citizen, that is a suspicious transaction. It's itemized right on the government's website.
Are regulations making it tougher to get money out of China?
No. Oh, well, you mean Canadian regulations, Jim, or Chinese regulations?
Any one of them.
Okay, so Chinese, yes. They've changed the regulations. In other words, you can't do it through a corporation. Now, my understanding is, from the lawyers in the States who participate in this discussion, now you've got to do it in your personal name. Okay, we'll do it in our personal name. We don't care. We want to get our money out of China. So they're doing it with their personal name. The circumstances in BC are perfect for it. So, yes, super easily done.
Do you see signs of the housing bubble bursting in Vancouver? And if yes, when?
Okay, so at the start of this discussion, you asked me what my firm does. And my firm, to your listeners, we allow you to time the market. For us, this is not complicated. This is not Ouija magic. When everyone else says you can't time a real estate market, we laugh at them. It is an absurd statement. Every single real estate market in Canada, even the Canadian market, can be timed. And it can be timed with enough lead time that you take a defensive position. And that's where the money's to be made, when people make defensive positions. As a homeowner, if I'm in a house that's appreciating, if Ross K. Realty Consultants told me my house was going to be worth 12% and more in the next 6 months, why would I sell it today for 12% less? It doesn't make any sense. What people have to understand is the reason you've never heard these things is because real estate agents don't know what they're talking about. It took me years and years, and I'm the 3rd generation before I understood how a real estate market functioned. When my parents would tell me about, oh, you've got to call so-and-so, it's time for him to sell, I didn't really understand what they were saying for the first 6 years. And that was when the house price correction, the last one, was going on. It started about halfway into my first 6 years in the business. Years later, I understood what they said. They just didn't say it to me in the way that I'm saying it to people today. A real estate agent I don't know, but I've got to check the legislation in BC. In Ontario, they cannot even legally price your home. the registrar here in Ontario takes out newspaper ads in the Toronto Star, and he explains it right in his own article that real estate agents are not licensed to price houses. If you want to do that, call an appraiser, because a real estate agent has no training. A real estate agent can't time the market. Look, the Bank of Montreal chief economist did an article called Goldilocks and the Housing Bears. And he made an offshoot comment about you can make guesses, but you can't predict the real estate market. I'm telling you today, I can predict them exactly 100%, always have been able to. It's even better now, because now, when I left the business, we formed an intelligence model that gives us, we're not talking within 2% any longer. We're talking within 0.3%, virtually every real estate market in Canada. It is so accurate, it's unbelievable. Right now in BC, housing prices are increasing at about 15%. And what that means is that a real estate market price movement. If you're driving your car down, let's do it this way. If you're driving your car down the highway, Jim, the speed limit is, let's say the speed limit's 50 miles an hour or 100 kilometers an hour. I'm going to use miles. You're driving your car at 50 miles an hour. If you take your foot off the gas, your car is going to stop in a certain distance. If you put the brakes on, it's going to stop in a certain distance. If you're driving that car at 100 miles an hour, you take your foot off the gas, it's probably going to take you 40% longer to stop. If you put on the brakes, it's still probably going to take you 40% longer to stop. Vancouver's real estate market is going 120 miles an hour. So the beautiful thing about today's real estate market is, unless foreign buyers stop buying overnight, which they're not going to do, or I'm still going to know that. I mean, you're still going to have 3 months notice. The market is going at such a high rate that you're going to have a few months to understand. If you were a client of ours, you would have a few months still in play. What I know is this. The foot has come off the gas in Vancouver. It came off the gas 3 months ago. We were the only place in Canada where you would get that housing intelligence. Toronto's came off last month. They're only 1 month with their foot off the gas. We know right now, by our calculations, Vancouver goes negative on sales volume in August. Now, does someone start putting the brakes on, and that means the sales volume goes negative in July? Or is there a tailwind that comes behind the car, and the negative happens in September? We could be off a month. Now, next month will be that much more accurate. So we're always so much ahead of the market, it doesn't matter. But that's what's going on in Vancouver right now. What I can tell you, as of the last numbers for the month of April, that was the third consecutive month of someone taking their foot off the gas. Right now, sales volumes the car is slowing down, that we expect it to go negative in August. What negative it means to us is this. The real estate board will do a news release, and they will say sales were flat year over year. In other words, if there were 1,000 houses that sold last year, this year sold 1,000 houses. The real estate board relies on corrected numbers from the previous year to allow themselves some flexibility in the current year to inflate the number. This has gone on, again, for decades. It's why you don't listen to a real estate board. And right now, whether August, there's enough flexibility that they can backdate last year's numbers and knock them down, saying that the year-over-year change, it's flat, I don't know. They may be, it's so close that they may be able to knock it down and say, oh, we still had a 0.5% gain in the month of August. But regardless of that, it means that the market is gone negative. So the following month, or the month after that, you're going to hear the real estate board say, oh, we still had a really great month, but sales are 2% lower or 5% lower than they were a year ago, but that's okay because that was a record year anyways. Warning bells to all your listeners who own houses and are worried about a house price correction, because those are code words that the real estate agents want to keep things going the way it is. They don't even understand the real estate market is correcting, Jim. The real estate economists at the Greater Vancouver Real Estate Board, or Okanagan, mainland, they do not know what I'm talking about. They have never sold a house, maybe their own. They don't have decades and decades of experience selling houses, so they don't know what I'm talking about. Any of the realtors from the 1980s are probably gone. They're probably not even working in BC. And they would need to have the insight that we have before they could even understand what I'm saying. So, you're asking me, Ross, when is the housing bubble going to pop in Vancouver? What I'm telling you is this. I believe that once you have negative sales volumes, in other words, the number of houses selling year over year are negative, everybody is going to panic, because that's what happens when people believe myths. They panic. Anyone who's not a client of ours, they're going to panic. I know that they are. They're going to go out and make a rush decision. Usually, that means you're going to see more inventory come on the market. So a house price bubble, generally speaking, is a self-fulfilling prophecy. You hear the bubbles popping, you make a rash decision, and it adds to the bubble popping quicker and prices deflating. Where the big problem is in Vancouver and Canada, hold on to your hat, Jim. 33% of Canada's average selling price is based in BC right now. So even though you only have 15% of the homes in Canada, your houses are selling at such a rapid rate versus the rest of the country that BC is eating up, responsible for 33% of the national average selling price. Imagine your market simply slows down. Prices don't change. You simply start selling fewer homes. They still sell for the exact same price, but you sell fewer of them. The national average selling price can drop 10% just by a small change in the sales taking place in British Columbia. That headline news across the country. Canada's house price correction has begun. Housing prices drop 4% last month. They're now down 10% year over year. You will see mass hysteria in the market. The only reason you don't see mass hysteria in Calgary and Edmonton right now is because you only have one market that you're talking about. So actually what's going on in Vancouver and Edmonton is, because there's fewer sales, they've had over a year and a half, the real estate agents out there have had a year and a half benefit of hiding behind the average selling price. It was only 2 months ago where someone started to put the gas back on the car in Calgary, even though it's only running at about 0.8 of the speed that it was before. That camouflages real house price drops. You don't see it because that's not how the numbers are reported. It's going to happen this time in Vancouver. It's going to happen this time in Canada. It's unavoidable.
How far could we see the ultra luxury and luxury markets drop, and could it happen fast?
Well, you've got to remember, these people already have got their currency out, and they have a price in their own mind what it's worth to get that currency out. Was it worth 10% to them? Was it worth 20%? I don't know what that number is. I'm not one of those people. You would have to talk to a currency exchange expert, which I am not. The only thing I'm an expert at is real estate. So I don't want to pretend that I'm an expert at stock markets, investing, anything. I am an expert at real estate. That's it. But Jim, I suspect that those people could take a hit of 10, 15, 20%, and that would be just simply the cost of getting their money out of China. Because if the yuan drops, I mean, it's easy to have your currency lose 20% of its value. So they have probably made some calculations. They probably know what's going to happen in China with the Chinese currency exchange versus the U.S. dollar. They probably know all these things, or they have a good guess. My guess is that has already been built into those calculations. All they do is they put their houses for sale. We'll take a 20% loss. We don't care. We got our money out.
In the late 80s, the Japanese bought a lot of marquee real estate in North America. When the bubble popped, they sold and went home. What are the investors from China likely to do when this bubble pops?
They will put if they're still living in China, which by the sounds of the number of flips that are gone on, there's a high percentage and the vacant homes, everything else that the situation is. It looks like it could be as high as 4-1. They're still living in China. They'll leave their money in Canada somewhere, or they'll move it to the United States, or they'll move it to Panama or wherever the best taxation situation is, or wherever it works best for them. And then when the prices drop, they'll get back into the market. So in other words, they want that Point Grey house. They did what they needed to do. Okay, we're going to wait for the prices to drop now. You know, all those Canadians can take the drop. You know, it's we don't care about them. We're in this for ourselves, which they are. They should be. So that's what I think will happen. They'll just put their money somewhere else, maybe in the stock market, somewhere else. I don't know what they're going to do with it. And when if they really do want to move from China, they'll then take that money 2, 3, 4, 5 years from now and buy an ultra luxury class house at whatever the prevailing price is then.
Is the Canadian real estate market overall a victim of this desire to move offshore currency into Canada?
Because every economist in Canada, every housing analyst in Canada, CMHC, Minister of Finance, StatsCan, all use average selling price, yes. Because in the month of March, there was an extra 100 houses sell in Point Grey. Those houses, just those 100 sales, okay, so those extra sales inflated the average selling price in Canada by $3,000. Just those 100 extra sales. So yes, it has massive in this particular moment in time, Jim, yes. If this had been 3 years ago, no, the impact wouldn't have been the same. But we have seen these. I mean, the Canadian price, Jim, is over 10% right now. It's trending at over 10%. While houses in, we're looking at about 80% of the country now are not even keeping up with inflation. But our average selling price has gone up 10%, as of April. It has. I don't think they have any. I don't think I have an idea what this means. I really don't. If you take the average selling price at $508,000 and you multiply that by the 12 million Canadian homes that they're claiming this average selling price is the average price, that equates to a $6.2 trillion housing market. My calculations, our firm, we know what the average house is worth today, and it's actually only worth $349,000. We don't use the average price. We look at what the average house is worth. In other words, we don't let that 33% BC override the 62% of homes that are on Realtor.ca today that could be bought for under $300,000. We look at the truthful number, the real number, and that's at 349. The difference between 508 and 349 is $2 trillion. $2 trillion. So in other words, if Canada's sales mix shifts back from what it is today to equal sales across Canada, your average selling price will drop over $150,000. Over $2 trillion is wiped out. We're looking at a real estate sector now that is dominating GDP, something it never ever did before these foreign buyers were buying. Never, because this artificial house price inflation wasn't taking place, so it couldn't happen. Now look at the situation. What are you going to do if that drops in half? It's a scary thought.
After the bubble bursts, are we likely to see real estate in Canada rebound higher in a few years?
No. Look at, if you take the Canadian average selling price, in other words, after the last house price correction, there's a period of time where the housing market itself works out what the average house is really worth. Okay? The housing market itself, if left alone, with no inflationary pressure put on it. Now, inflationary pressure means artificial pressure. In other words, leapfrog financing, bad appraisals, people being misled, the truth about real estate not being told. Housing prices will increase at 3.7% a year. That's what they increase at. Inflation plus the cost to maintain your house. Normally, in the last 25 years in Canada, the cost to maintain your house is 1.6% of its value. So take inflation, 2%, take 2.1%, take 1.6% to improve your house, maintain it, keep it at market value. You're at 3.7%. So housing prices should go up 3.7%. You have to go all the way back, Canada, to 2003 when the market was rebalanced. In other words, it was 2003 when the Canadian housing market worked its way all the problems out and it returned to what the average selling price should be. The market determined what that price was, not me. Now apply 3.7% per year. Okay, so if you take it back then, we're looking at about 178,000 in 2003. Get your calculator out, multiply it by 1.037 for each year that we've gone past 2003. That's what the average selling price of the house should be in Canada today. Take that against what they're saying it is, which is 508. Now keep hitting your calculator. Count all the extra times you have to hit your calculator. And when you finally get up to 508, that's the number of years it's going to take the Canadian housing market to recover this time. Right now, we're looking at a possibility of a 17-year house price correction. What that means is that only the people that have to move or have saved extra money will move. Everybody else will just simply stay where they are, which is what happened throughout the 1990s. The only people who moved out of need or because they got a new job and a raise. Everybody else stayed exactly where they were. That house price correction nationally went from 1990 till 2003. That took 13 years. Now we're saying it's going to take 17 years. We already have a 13-year house price correction as proof. Why, when history has already shown that that's just the way it is, would we expect anything different? So at a national level, we're looking at about a 17-year period of house price stagnation, which would allow inflation and renovation costs to catch up with it. And at that time, you're probably looking at house prices going forward. In the meantime, you've got losses during virtually the first 10 years of that period.
Ross, thank you very much for chatting with This Week in Money.
Thanks a lot, Jim.
My guest has been Ross Kay from Ross Kay Realty Consultants. His commercial website, rosskay.com. His consumer site, rosskay.ca. That wraps up our show for this week. We'd like to thank our guests, Ross Kay and Ross Clark, and thank you for listening. Comments or questions for the show can be emailed to info@howstreet.com. I'm Jim Goddard. We're back next week with more This Week in Money.
This Week in Money is a production of How Street Media Incorporated.